What is the best stocks and shares ISA in the UK? Some people swear by Trading 212, calling it the ultimate commission-free platform. Others say platforms like InvestEngine are what serious investors should really be using. And depending on who you ask, one is either revolutionary or simply overhyped. So, which makes the most sense for a beginner investor in the UK right now? Let's break it down. The first thing most people notice about Trading 212 is how easy it is. The app is clean. Everything is where you expect it to be. Well, until recently at least. You can buy a stock, build a pie, auto-invest or rebalance in seconds. It's clearly designed to feel welcoming, especially if you're a beginner. But that ease comes with a subtle side effect because when everything is that accessible, it's also easier to overdo it. More trades, more tinkering, more decisions. Now, compare that to InvestEngine. When you open InvestEngine, it feels calmer, almost boring. And I don't mean that as a negative. No individual stocks, no CFDs, no flashing distractions, just ETFs. It's very clear what this platform wants you to do. Invest regularly, stay diversified, and leave it alone. And already you can feel the difference in philosophy. Trading 212's biggest headline is commission-free investing. And to be fair, that part is fairly true. You can buy and sell stocks and ETFs without paying a commission. But this is where people stop reading because Trading 212 doesn't make money on trades, it makes money around them. If you're buying US stocks or ETFs in pounds, you pay a 0.15% foreign exchange fee when converting currency. That doesn't feel like much, but over years of investing, it quietly compounds. Then, there are a few usage-related fees to be aware of, like card deposit fees. None of these are deal breakers, but they're easy to overlook. Now, compare that to InvestEngine. If you're using their DIY account, there's no platform fee, no trading fees, no foreign exchange fees because ETFs are GBP listed. And if you choose their managed portfolios, there's a flat 0.25% annual fee. Automatic rebalancing is included and portfolio is built and maintained for you. For beginners especially, that manage option can be quite helpful. No second guessing, no overthinking, just set and forget. So what can you actually invest in? Trading 212 gives you options. Lots of them. Over 13,000 stocks and ETFs across the UK, US, Europe, and rest of the world. Fractional shares, and if you want, CFDs, although I'll treat those with caution, but there are still gaps. No bonds, no crypto, no options. InvestEngine, on the other hand, makes what looks like a very deliberate decision. No stocks at all. Only ETFs, equity ETFs, bond ETFs, commodity ETFs, global, regional, thematic. At first, that sounds limiting, but for long-term investors, it removes a lot of unnecessary temptation. You're not asking, should I buy this stock? You're asking, what allocation actually makes sense? And that's a very different mindset. Trading 212 SPIs are genuinely one of its best features. You can build a custom portfolio, set target weightings, invest automatically. It's great for structure, but there are two limitations people often miss. First, no automatic rebalancing. If markets move, and they do, allocations drift, and you have to fix that manually. Second, when you sell from a pie, it's market orders only. No limit orders, no price control. Most of the time that won't matter, but in volatile markets, it's something to be aware of. InvestEngine handles this differently, especially with their managed portfolios. Rebalancing is automatic. Adjustments happen in the background, and no manual intervention is needed. This is where InvestEngine really appeals to people who want investing to run quietly in the background. If you're finding this useful so far, hit the like button. It genuinely helps more than you think. It tells the algorithm this is useful information. And if you're new here, subscribe for more investing content. Thank you. Trading 212 has clearly tried to become more than just a broker. You get a virtual or physical debit card, cashback on purchases, and interest on uninvested cash. It's clever, and for passive investors, those roundups can genuinely add up over time. But it's not a full bank replacement. InvestEngine doesn't even try here. No card, no interest on uninvested cash, no cashback, just investing. Both Trading 212 and InvestEngine offer general investment accounts and stocks and shares ISAs. Both also operate flexible ISAs, meaning withdrawals can be replaced within the same tax year without affecting your allowance. But here's where InvestEngine quietly pulls ahead. InvestEngine also offers SIPP accounts, for retirement investing and business accounts for company investing. Trading 212 doesn't currently offer either. And when it comes to moving platforms, InvestEngine supports in-specie transfers but only for full ISA transfers. If you're transferring part of an ISA, your investments are sold and moved as cash. And importantly, InvestEngine currently doesn't support in-specie transfers out. Transfers out are cash only. Trading 212, on the other hand, supports in-specie portfolio transfers, so you can move holdings without necessarily selling everything first. One more thing, Trading 212 also offers a cash ISA alongside its stocks and shares ISA. InvestEngine doesn't. It's stocks and shares ISA only. So if you want a dedicated cash ISA wrapper, Trading 212 gives you that option. Both platforms are FCA regulated and covered by FSCS protection up to £85,000 or £120,000 for uninvested cash. Client money is held separately and tax statements are available. Let's look at the pros and cons of both platforms. Trading 212 offers individual stocks and ETFs. You can earn interest on uninvested cash, multiple currency accounts, debit card with cashback, in-specie ISA transfers in and out. But there's 0.15% foreign exchange fee on currency conversion, no automatic rebalancing, no SIPP or self-invested personal pension, no business account, and no managed portfolio. On the other hand, InvestEngine's pros are ETFs only, so less temptation and more focus. Managed portfolios with automatic rebalancing. Single currency investing, so no foreign exchange fees. SIPP accounts are available and business accounts are available. And its cons? No individual stocks, no interest on uninvested cash, no debit card or spending features, no separate cash ISA. Transfers out are cash only. Partial ISA transfers in must be done as cash. So, which one should you actually use? If you enjoy control, flexibility, and a more hands-on approach, Trading 212 makes a lot of sense. If you want simplicity, structure, and fewer decisions, especially as a beginner, InvestEngine's managed or DIY ETF-only approach can quietly work very well. And if you're thinking of retirement planning or you're a business owner, InvestEngine's SIPP and business accounts are clearly unbeatable here. Put simply, Trading 212 is a bit like driving a manual. More control, more involvement, and more to think about. InvestEngine is closer to an automatic. Less effort, fewer mistakes, and it still gets you where you want to go. If you want a deeper dive, I've done separate full reviews on both Trading 212 and InvestEngine. I'll link those at the end so you can go into the details properly. You'll also find my sign-up links in the description, which come with bonuses if you decide to use them. And if this video helped, please like and subscribe. It genuinely tells the algorithm this content is useful, and it supports the channel far more than most people realize. Thanks for watching, and I'll see you in the next one.